After starting a life insurance policy, how soon can I get access to the funds? How quickly can I borrow against the funds? Is it liquid? Do I need to have it for 30 days, a year, 2 years until the policy is essentially in the green to where I have more cash value than I put into it? These are the questions that I get often because a lot of the times I speak with people who are real estate investors, who are business owners, who are seeking opportunities, or they just want to use this for an emergency fund. And they want to know how quickly can you get access to your funds, which is super important because we look at other vehicles such as, a 401k, an IRA. Your funds are locked up until you're 59 and a half unless you want to take a early withdrawal penalty, 10%. And there's also some tax penalties if you take it too early as well. So with that being said, the and asset / infinite banking policy overfunded whole life insurance contract, I am going to dive into looking at numbers, how soon, how quickly you can get access to your funds and what percentages you can do. With that being said, let's go ahead and dive into the numbers and go ahead and take a peek. Here's the caveat to it. It's going to depend on the contract and how it's designed. Here, what I'm doing is I'm showing you a policy that is a typical whole life insurance policy. So we have people like Dave Ramsey, Susie Orman, the people of the world of the financial space that say, hey, life insurance is a terrible place to store money. This is the time when I agree with them. Because when we look at this policy, you can see here is going to be our premium outlay. And here's going to be the total amount of premium that we've put into it. You'll see that first year, $100,000, zero cash value. Second year, another $100,000. So now you've put in a total of $200,000. And in year 2, there is $0 available of cash value. So when somebody asks a question, hey, how soon can I borrow from against my policy? Well, if you have a typical whole life policy, the answer is you can't borrow any within the first, 2 years. Finally, in year 3, you have the ability to borrow some funds. All right. So I just wanted to just make that real clear. If you're looking at a typical whole life policy and you're wanting to have this for access to cash and liquidity and control, the way that most people may design these policies, looking at it from a death benefit perspective, the reason why this is designed this way is because death benefit is super important to the person who's buying this contract. When we're designing the contracts, 99.9% of the time, we're focusing on higher cash value and be able to use it to be able to borrow against for other asset producing activities. So let's go ahead and take a look at a and asset type of style policy and see, well, what is the difference in regards to the amount of available cash value that you can borrow against and use right away. So you've put in $100,000. It's the same thing, $100,000 contract every single year. And then you can see this is the total amount of money you put into it, 100, 200, 300, every year goes up by 100,000. The first year, this is at the end of the year, and this is something that I want to make very clear, is cash value at the end of the year is $91,496. Okay, so that is something to pay attention to, is that it is at the end of the year. All right, so just because it says at the end of the year, that doesn't mean that we don't have the ability to borrow against our policy sooner. So here's what I have seen. I have seen people borrow against their policy as early as 10 days as starting their policy. I'm sure there's been other incidences where people are able to borrow sooner, but what I always like to tell people is that being able to borrow against your policy within 30 days is a conservative number to be able to have access to cash value. 30 days is a good number because it allows the insurance company to make sure that the money goes through, the check doesn't bounce, the direct deposit is actually good to go, and that there's no money laundering involved. So once the insurance company does its due diligence, then the cash value is essentially applied, and then there is a percentage where you now have the ability to access and borrow against. So what I always like to tell people is that 80 to 90% of the end of the year cash value is typically around the amount of you'll have to borrow against within the first 30 days. So if I were to pull up a calculator here and it shows 91,496, and we were to multiply that, let's just say on the conservative side, by 0.8, as in 80%, 0.8 equals. So you put in 100,000 and you have about $73,000 on the very conservative side of things to be able to use and access for whatever you want, for real estate, business, opportunities. You can use this for paying off debt. I highly encourage people to use this for asset producing activities. But if you wanted to use it for liabilities, you could as well, but that's not something that we encourage or even preach as well. So with that being said, try to make this short. Just wanted to share how soon can you get access to your funds, and it just depends on the contract, and also it's really going to come down to when and how you want to use your policy.
Hey, I want to thank you so much for watching this video to the end. This video is on life insurance, and if you have more questions about life insurance, infinite banking, why you should overfund it, we have a link below that goes to our And Asset Vault. This is a free vault that gives you everything you need to know about life insurance. We have case studies, we have a calculator on there, we have a handbook, we have frequently asked questions, we go through a process. I have my masterclass on there. We literally want to be the one-stop shop for every life insurance decision. And so if you want to learn more, click the link below, and we look forward to educating and maybe opening your mind and eyes to the power of life insurance.